if you have any questions. Thank you. Utilize the chat if you have any questions, and we will get started. So let's talk a little bit about the agenda, what we will be covering here today. So next slide, please. Tonight, we will be covering a CLT, Community Land Trust. So we'll talk a little bit about the model, what makes the model unique, what makes someone eligible for our program. We'll talk a little bit more about ground lease and home ownership, why home ownership or how home ownership in the CLT model is different than the conventional market. And then lastly, we'll talk about how to apply. So we'll give some tips and instructions on the application process. So right now we want to know a little bit more about who's in the room with us and how you found out about the program. Again, please feel free to utilize the chat or to come off mute. We would love to know who you are and how you found out about the program. Are you an interested participant, concerned citizen, a realtor, a lender? Please feel free to utilize the chat at this time or come off mute.
Hello, my name is Tiara Battle. I found out about the program. I have a cousin that lives in Marana area, and she knows I'm a single mom, and she just was like, I've been renting, a lot of apartments and stuff like that, and I'm just, getting my credit and stuff together. So she said, I heard about this program that's very good, about first home owner, buyers and stuff like that. So she said you should look into it, for you and your daughter. So that, that kind of, made me interested, and I think I have a property, I think a lot in Chester also. I rode by one time out in Chesterfield. Yes, I said, okay, this might be a good opportunity for me and my daughter. So that would make me interested. And that's how I found out about a family member that also is a homeowner, that has been a homeowner for over like 40 years. So she wants the same for me.
Okay, great. Thank you for sharing that. Anyone else?
Thank you.
I see a few people in the chat chiming in about their name and interested buyer, someone recently located to Richmond. Welcome to Richmond, Virginia. So I also want to and continue to utilize that chat. Thank you so much, everyone that has chimed in of their interest. People have been referred and by someone who purchased. That's great to hear. First time home buyer, awesome. Awesome, awesome. So I also want to take a moment to introduce any lenders that we may have on the call. Any lenders, please come off of mute and introduce yourself as well.
Good evening. My name is Mary White. I am with Town Bank Mortgage, and I have been working with the Maggie Walker program since it began and really enjoy working with the Maggie Walker folks. They are great and they do a wonderful job, and this is a great program. So thank you all for participating, and I think you're going to see some wonderful things.
Thank you so much, Mary. And I believe Jordan from VACU from Virginia Credit Union is also on the call. I believe I saw his information in the chat. Jordan, you're welcome to come off mute if you want to, and if not, I know you put your information in the chat as well.
Hey, good afternoon, everybody. This is Jordan from Virginia Credit Union. The Maggie Walker program is really great. It's awesome to be here in your first step towards your home ownership process, and I'm excited to be here along with you guys.
Awesome. Thank you, Jordan, for that introduction. And everyone that's on the call, before we get off the call, or actually after we get off the call, we invite you to go to our website where all of our lenders' information is listed. So we do have Jordan and Mary here. Their information will be in the chat. So please feel free to utilize it. And all of our lenders' information is also listed on our website. We also, and Shabana, if you don't mind, also put it in the chat. We do have a lender if you are not currently working with someone. Her name is Jen Cox. Unfortunately, she's unable to be at our session tonight, but we will have that information for you in the chat. And if you're currently working with someone, you can have your realtor to reach out to her as well. What just popped up on the screen is a poll just to let us know a little bit more who's in the room. We already discussed that, but this is a way that we can know everyone, even if you didn't want to chime in. So just take a moment to respond to that as well. There is no test. This isn't a test. This is just something to get for us to know who's here. And so while you're doing that, I'm seeing a lot of things pop up in the chat. People looking for a new home. Thank you so much. Some of the names are quite familiar. So it's good to have everyone here tonight. Okay, let's move on to the next slide, please. So let's talk a little bit more about the program in and of itself, okay? So the Maggie Walker Community Land Trust program is an alternative route to home ownership. And I use the word alternative because this may not be for everyone, but this is a way to get a step into home ownership, especially right now where the numbers and prices of homes are so expensive. And so the program creates homes that are sold to qualified buyers. Again, we'll talk about qualification and eligibility a little bit later in this session. But that person purchases the home or owns the home and purchases the home and leases the land that is underneath the house. Again, we'll talk about that a little bit more. But our homes receive permanent subsidy that stays with the home and allows the home to be sold below market value. And more often than not, pretty much every time we sell a home, it assesses much higher than the price of the home. Okay, next slide, please. So what must be noted is our namesake, Maggie Lena Walker. If you are from Richmond, you should have heard about her, but if not, we want to take a moment to tell you a little bit more about our namesake. Maggie Lena Walker was born here in Richmond. She also presided over she was the first Black woman president to preside over a bank. That bank was then called St. Luke Penny Savings Bank. It later transitioned to Consolidated Bank and Trust. Right now, that location is now where the bank is, not the original bank, but Consolidated Bank and Trust. The main branch is still downtown, but it's now called People's Advantage. So completely different bank, but you will see a picture of her there. That place isn't too far from where the monument of Maggie Walker is on Broad Street. But what is to be noted about Maggie Walker was she wasn't just a president, she was a very successful entrepreneur who believed in providing opportunities for people to expand not only their income, but their ability to gain wealth and to have new opportunities. And her work really impacted the community at large, not just locally, but even nationally. So we do this work in her honor. She definitely paved the way for Black-owned businesses and community leaders. And so we want to honor her in the work that we do, and this program is a way in which we do that. Next slide, please. So utilize the chat. I'm very interested in knowing if anyone has even heard of a community land trust before, okay? And if you have, you would know that community land trusts are not new. Community land trusts were birthed out of a grassroots movement, and it was actually birthed out of the civil rights movement. So when Black citizens were found to be voters, right? They were registered voters. They were often kicked off of their land. If they were sharecroppers, they lost their homes basically. And so Black activists got together. This was originally done using farmland. The model originated with farmland, but Black activists got together to rally their strength in numbers to say, hey, we don't want this to happen again. We will purchase land and move from that position so that the land would never be sold, right? And so that is the work that we do. It is a way of expressing equity and racial justice and environmental justice in our communities. So again, that's the history of community land trust. And it's nothing new. I know that a lot of people may not have heard of them before, but they aren't new. Okay, next slide, please. So let's talk a little bit about what makes you excited or nervous about homeownership. And listen, both can exist at the same time. You can be nervous and excited at the same time, or one or the other. So we want to take a moment to ask you that. What about homeownership makes you excited or nervous? Please feel free to utilize the chat or come off of mute to share that if you don't mind. What makes you anxious or excited about homeownership?
This is Tierra Battle again.
Mhm.
What makes me what makes me excited about home ownership is just having a stable foundation. Not really coming from one like first generation or second generation home buyer. But just having a foundation, a stability for my daughter. That's like my main focus right now. Just having a stable place for her. I want to see her grow up in one place, something
Thank
that
you
I
for
just
sharing
had.
that.
Yep. So just a little piece.
Thank you so much.
No problem.
And I believe you're in great company. I see someone says owning your own, excited to have your own for your family. Not having to depend on anyone else.
Yeah.
I'm nervous about the price of the mortgage. Budget is very high. You are not alone, never alone in that regard. Yeah, so thank you everyone for sharing that. Definitely both, like I said, can exist at the same time, and hopefully you'll learn something today to let you know not just more about the community land trust, but that you can do this. If this is your dream, you can accomplish it. And some things you have to do it scared if you really want it, right? So homeownership can be one of those things. Next slide, please. So let's look at a few places that we exist right now, okay? Of course, we are in the Richmond area, Richmond and vicinity. That's inclusive of East End, North Side, the Randolph community. We are also in Ettrick, which is right on the line of Petersburg and Chesterfield County. It is a rock throw from Virginia State. We're excited about that because that is our first subdivision. We have homes under contract in Ettrick. They are 1,500 square feet, 3-bedroom, 2-bath homes that we are excited about. Someone mentioned Varina, and we do have homes coming in Varina as well. Not before the end of the year, but definitely in the making. Okay, so next slide, please. Okay, so a little bit more about a community land trust. Okay, and these are the things that make us a little bit different. So yes, we are a nonprofit organization. We are community-based. We believe in stewardship of the land, okay? And the stewardship of the land keeps our costs down, but it also keeps that permanent affordability, meaning there is one hand pulling you into the program, and you in turn pull someone else into the program if you choose to resell. So this is the way that we keep the homes affordable. Someone is purchasing the home, or which is often referred to as improvements, and leasing the land. We'll talk about that a little bit more as we go along. Next slide, please. So permanent affordability now and in the future. So in a nutshell, this is an eagle's glance of how CLTs work and operate, not just Maggie Walker Community Land Trust. But the first step is a family purchases a home that sits on the land and owned by the CLT. Let me clarify. It can be a family of one. We do not have restrictions in terms of what the household dynamic may look like, okay? So a family, inclusive of a family of one, will purchase the home that sits on the land that's owned by the land trust. The home is affordable because prospective buyers are purchasing the home, not the land. Again, leasing the land, okay? The land is leased under a renewable ground lease. That ground lease is renewed every year, and it's renewed by a payment every year. So you don't have to sign new documents every year, but you will make the payment once a year to say that you will continue to uphold the ground lease, which makes the CLT what it is. Okay, and the homeowner also resells with limited equity. And the reason for that, again, is keeping in mind that the program is pulling you in, and then you're pulling someone else into the program if and when you choose to resell. You do not have to resell. We'll talk a little bit more about how owning under a CLT is a legacy opportunity. It is, you can pass your home down. Again, we're pulling into what Maggie Walker believed in, that you leave a legacy. You leave an inheritance, and this is part of that. Next slide, please. So what's unique about a CLT home or owning a CLT home? So what must be noted is that when you buy on the conventional market, you purchase the house and the land. Well, when you purchase with the CLT home, you're purchasing the house at a subsidized rate. Again, our homes assess extremely more than what we are selling the homes for, and that is because of the subsidy, but also because of that, the land in and of itself remains in the trust. So you're leasing the land. However, you use it the same way that anyone else would use their land. You can garden, you can put up a fence. There are things that you have the privilege to do that anyone else purchasing on the conventional market can do. Now, what must be noted is that this must be your primary residence. Again, this must be your primary residence, meaning this is the home that you live in. That is a requirement in this program. Renovations must be approved. What I mean by that is if you decide you want to knock out a wall or you want to add on to the home, those renovations must be approved. And that's for several reasons. However, the main being, we want to make sure that any additions, edits, or renovations are up to a particular standard that makes the home, number one, safe, but number two, safe enough and to standards that someone else would be able to move in if that home is sold. So any major renovations need to come through the board and be approved. I see someone asking about a privacy fence. We would like to know if you're putting up a fence. We need to know that you're putting up a fence, but that does not need board approval. So here's an easy way of remembering what needs approval and what doesn't. If it needs a permit, i.e. you need to go to the city or county and get a permit for the change, then that means it needs approval. If it does not require a permit, changing fans, changing knobs, painting, a privacy fence, that does not need approval, okay? We just want to know about specifically the fence. If you're changing something in the home, like light fixtures or anything like that, we don't need to know about it, okay? Now, you will build equity in your home, okay? So you'll build equity from your mortgage payments, plus the increase in the value of the home, which is based on the area median income at the time that you sell the home. So we will discuss that a little bit more as time goes by in this presentation. Next slide, please. Okay, so we talked a little bit about the ground lease. Okay, here's some more specifics about the ground lease. The ground lease is for 99 years, right? And what that means is that how you are still purchasing the home, leasing the land. It is a legal document utilized by all community land trusts that keeps that home affordable for a minimum of 99 years. Okay. Again, think back to the legacy of Maggie Walker, which is an inheritance. So the home can be passed down to your heirs regardless of their income. So you as the buyer or the prospective buyer have to income qualify for the program. But if you choose to pass your home on, that person does not have to income qualify. That person does have to abide by the ground lease and the rules of the ground lease, i.e. this has to be their permanent home, and adhering to the ground lease in and of itself. But yes, this home is fully inheritable. The ground lease is $100 a year. That's it. I repeat, the ground lease is $100 a year. So you will be sent an invoice to pay your ground lease once a year. And that is important because not doing that puts you in default of your ground lease agreement. But yes, the ground lease is $100 a year. Next slide, please. So we talked about a few instances where if you want to make renovations, that you would need approval from the board. So let's talk about the makeup of the board. The board is comprised of 1/3 homeowners, 1/3 public members, and 1/3 community members, right? So there are people that are in the housing industry, and there are also people that are passionate about a community land trust model, right? And then, of course, homeowners. So we encourage people when a seat for homeowners becomes available to really get involved and get engaged as a board member. Next slide, please. So program eligibility. Okay. This is the nuts and bolts of the program right here. You must be income qualified. We'll talk a little bit about that in the upcoming slide. You must agree to the terms of the ground lease. We just reviewed that. The biggest thing is that the ground lease is a 99-year ground lease and that this is your primary residence and your property cannot be used as an Airbnb or rental property. And that is we definitely want you guys to note that because doing that would be a violation of the ground lease. So you'll be in default of your ground lease, but also the principle of that is that this is an affordable housing program. And one way that we honor that is to make sure that people are not misusing the home in which should be the primary residence, okay? Be approved for a pre-approval, excuse the typo there, for a minimum of $150,000 from one of our approved lenders. Again, there are 2 on the call tonight with their information in chat, but there are others on our website if you're interested. You want to date I like to say you want to date your lenders, ask all of the questions before making a decision on who you want to engage with. Okay, cannot own another home at the time of closing. So you cannot own another home once you start this process, okay? Next slide, please. So we talked about income requirements. And again, we'll talk about the eligibility process later in the slides. But these are the income requirements. This is a cap. This is not the minimum, okay? So 80% AMI. AMI stands for area median income, okay? So this is the cap. A one-person household or one-person family cannot make any more than $61,800 under the 80% program. What does that mean? It means that is the number. 61,800 is the most, or the amount that 80% of the people in Richmond and vicinity are earning, okay? That is the cap. On your right, the shaded column is the 115 program. Okay, so the most that a one-person household can make is $88,800. Most of the homes that we have coming available are in the 80% program. Okay, but keep in mind, we have the 80% and 115%. That is the most, okay? Not the least, but the most. And these numbers, we did not come up with, these numbers are HUD numbers. So Housing and Urban Development, any affordable housing program would utilize the area median income of their area. And again, this is Richmond and vicinity. So this is inclusive of Henrico and Chesterfield. But any program will utilize these numbers. So whether you choose to purchase a home through us or some of our partners in the industry, they would use these same numbers as well. Next slide, please. So we have a moment for Q&A. Any questions? First, I would like to talk a little bit about the house that you see on your screen. This house is on Midlothian. Am I saying that right? Yes. So on Midlothian, on the Richmond side of Midlothian. This house is just a little under 1,500 square feet. It is 3 bedrooms, 2 baths. This home was built in partnership with Project Homes, and the land was made available through the Richmond Land Bank program. This home was in an 80% program, and this house sold for $190,000. So great, great deal. At this time, I am going to check the chat to see if we have any questions. So I see, can you put up a privacy fence? And can you put a gazebo also? Privacy fence, I think I answered that. Yes, gazebo. I'm going to say possibly, because it would depend on the jurisdiction as well. So that's something that if you were to become a part of the program, we could talk a little bit more about that depending on where the home was. I'm sorry, where the home that you purchased was and what the guidelines in that county or city were or are. Let me scroll up to see if I see any additional questions. I don't see any right now. Is there a question that someone wants to come off of mute and ask before we move forward? Okay, great question, Jessica. And everyone, if I mispronounce your name, please correct me. I want to call you what you were named, okay? The question is, if you purchase under the 80%, but later, let's just say your income increases, we do not go back and income qualify you. Once you purchase, the home is yours. We won't take the house from you because you earn more money. That's what we want you to do. Now, we may send out a survey to see what kind of changes may have happened since you've purchased, but that in no way impacts your ability to own your home. Not at all. Any additional questions before we move forward? You're most welcome. Okay, let's move forward and again, continue to utilize the chat if you have any questions. I'll take this one before we move forward. Do you calculate by employer income only, or do you include child support in the income calculator? Yes, it is a holistic perspective. We look at income coming from wherever you're gaining income, and child support is considered part of earned income. Okay. So let's talk a little bit more about how the program works. And for this part of our presentation, I will turn it over to Elizabeth.
Thanks, Candace. I'm going to talk a bit more in detail about the resale process, the purchase process, and how your mortgage works. I am going to use this home as an example. This is one of our CLT homes that was sold in the Randolph neighborhood in Richmond. So this home was appraised for $340,000. And how we were able to sell it to the eligible buyer is removing the land value, which was $90,000. And we added additional subsidies and grants to the sales price for the buyer. So this buyer ended up purchasing this home for $180,000, which is significantly less than $340,000, which is the market value. So with a lower sales price, by reducing the cost of the land and with our subsidies, this home buyer ended up borrowing less money from the bank. They had lower monthly mortgage payments and a lower down payment than they would have if they had purchased this home on the market. So I'm going to talk a bit now about your monthly mortgage payments. So you will build equity by paying your monthly mortgage payment just through paying your principal. And this is a graphic representation of how your mortgage works. So the big blue box represents what you are paying to the bank each year for your loan. So around the second year of your mortgage, most of your money is going into interest with only a smidge going into your principal. However, the longer you're in your house, the more of your payment goes into principal and less into interest. And this concept is true for all mortgages, not just for the CLT program. And another part of your monthly payment is called your escrow. So as a homeowner, you are responsible for your insurance and taxes, which are due every 6 months. Those can be a pretty hefty sum. And the bank wants to make sure that you pay your taxes and insurance, because if you don't, you could lose your house. So instead of paying that twice a year in a big sum, this amount is divided into smaller payments that are paid monthly. And this escrow account, that becomes part of your monthly mortgage payment that the bank will use to pay the insurance company and the locality where you owe taxes. So that amount can change year by year. However, it won't generally jump as much as a rent payment could year by year. So another amazing thing about our program is because we are the Richmond Land Bank and the Land Bank for Henrico and Chesterfield County, we are tax exempt on our land. So the land is not taxed. You are responsible for the improvements taxes. However, that amount, you can only be taxed on the amount which you can sell your home for. So you're not going to be taxed on the market value of your home. You're only taxed on what you will be able to resell your home for. So this is another affordability feature, especially in high value real estate markets. So you are responsible, again, for paying taxes on the house, not the land, and the taxes are deductible if you itemize your tax return. Another thing about our program is maintenance. So we are a home ownership program, and as a homeowner, you are responsible for things that you may not be as a renter. So you are responsible for broken appliances, leaky roofs, broken windows, etc. You are also responsible for the upkeep of your home and any necessary and routine maintenance. Our homes do come with a warranty of 1 year, and the major appliances do fall under that warranty. But as a homeowner, you do have responsibilities in terms of maintenance and upkeep of your home. So in terms of renting the land, you are responsible for the upkeep of your land. So mowing the lawn, taking care of dead trees. You are also allowed to plant a garden, have backyard chickens, as long as it's permitted by your local jurisdiction. So even though you are renting the land, you are responsible for full use of it as pertains to your locality. And again, you are required to pay $100 annually as part of your ground lease fee. I'm gonna use this space for some more questions before I get into the resale formula. But first, I will let you all have a peek at one of our homes in Blackwell in Richmond. This home sold in 2023. It is a 3-bedroom, 2.5 bathroom, and we sold this home for $180,000. And this was a partnership with the City of Richmond. This land came to us through the Richmond Land Bank program. I'm going to look at the chat. If anyone would like to come off mute and ask a question, this is a good time to do so, or you can put your questions in the chat.
I've been answering the questions in the chat. I think Tiara, did you want to share something?
Yeah, I just wanted to ask the question. I see that y'all you said the Verona Foundation is not done yet. But I seen on the map, Eastern Henrico, is that considered the Verona Foundation, or y'all gonna have another one for the Eastern Henrico? Because that's where my daughter goes to school. So I just wanted to know if that's different from the Verona, section. There's another one coming in Eastern Henrico.
Yeah, I'm not familiar with the Verina Foundation as a project, but we do have some upcoming projects in Verina.
Okay.
They'll be
Okay.
2025.
Excellent.
No worries. Does anyone have any general questions about the program, how it works, what you're allowed to do, or anything like that?
There is a question in the chat about does the mortgage stay the same year after year? So yes and no at the same time. The mortgage does, first, let me say, speak to your lender about that, okay? But your mortgage will stay the same, but taxes tend to go up over time. So taxes are included in your mortgage payment. So it may look like your mortgage is going up, but in fact, your taxes are going up. And because they are combined, you may pay more another year than you may pay more over time, but it's not your mortgage going up, it's the insurance attached to your mortgage payment. I hope that clears that up for you. Any other questions before we move forward?
Yes, so just to clarify, the amount that you owe to the bank will not change, but the taxes and insurance may change. And also if you make more payments or like a big payment or something, that could also change the length of your mortgage and how much is going into principal sooner.
And let's take a moment. Forgive my brain freeze there. Let's take a moment. Mary, if you're on the call,
Yes,
Elizabeth,
ma'am.
thank you. Elizabeth mentioned just now, everyone, that if you make an extra payment or a lump sum payment over time, that will of course bring your principal down. But Mary, can you speak to, and again, Mary's one of our lenders on the call. Mary, can you speak to if you make one extra payment a year, what that does for your mortgage?
Yes, so if you add one extra payment to the principal balance of your loan every year, it will reduce the term of your loan from 30 years to 23 years. And what's nice is you could take that payment, and if it's too much for you to make in one lump sum, you can take your payment and divide it by 12, and then just every month add that little bit extra in addition to your normal monthly payment, but add that little bit extra going towards the principal balance.
Thanks for sharing that, Mary.
You're very welcome.
Okay, I will go ahead to the next slide, but if you have any questions, please put them in the chat, and I will answer them at the end of the next section. So I'm going to go into the resale process now. What happens when you sell your MWCLT home? So this is different than on the traditional market. So you must sell your home to another income qualified buyer. So the way that our program works is that Candace likes to use the analogy of there's one hand pulling you in and then another hand that you're pulling someone else in. So the subsidized price of the home will stay with it in perpetuity, and it will be affordable for the next buyer who also must be income qualified. And the land remains held in trust. So when you go to sell your home, you are entitled to get back your home's increase in value, and this is based on the percentage increase in area incomes over the time that you have been in your home. So this is not determined by the market. It is determined by wages. You're entitled to get back your cash equity, so that's any down payment that you put onto your house at purchase, and then any earned equity, which is that amount that you gain by paying your monthly mortgage principal through your monthly payment. So the resale formula that we use, again, this is different than the traditional market. This is what makes our program unique. The resale formula gives homeowners a return on their investment while also ensuring that it retains long-term affordability for future buyers. So this method is really meant to balance the benefit of you and earning equity while also keeping in mind the community and future affordability for others. So the original area median income, that was the median income when you purchased your home, will be subtracted from the most recent area median income number. And those are again, the numbers that are determined by HUD each year. And that is how we calculate the formula price and determine the percentage increase in your home. And that's how we determine the purchase price and the increase in value. And that's how we determine your equity as well as the price for the next buyer. And I know that's a high level overview, so I'm going to go into an example right now. So for example, if a homeowner goes to sell their house and the AMI that when they purchased was $83,000, and they go to sell their home, that number is $90,000. We look at the 5 years that that person has been in their home, and the AMI over that time has increased by $7,000, which is 8.41%. And then we multiply your original sales price by 8.41%, which equals, in this example, where the sales price was $180,000 in that first slide I showed, that equals $14,580. So the earned equity based on the percent increase in wages is $14,580. And that is just the increase in value, but in terms of the equity that you earn, you also get your down payment and any principal as well. So historically, this has not been the case, but if the AMI decreases over the time that you've been in your home, you are still able to sell your home for what you purchased it for. And that's a very unlikely situation that wages will decrease in the region. But if that does happen, you are protected against that. So when comparing this to the traditional market, your home value is based on market fluctuation, and that can either be a really good thing in strong real estate markets or a negative thing when there's a really weak real estate market. So in thinking about our program, that has a protection against these market conditions that can be a bit volatile. So that is another benefit of our program. So when we go to look at your equity earned through your monthly mortgage payment, in 5 years, in this example, the homeowner is building $15,000 from just paying their monthly mortgage payment through their principal. And in 5 years, let's say that they're gonna sell their CLT home. They have accrued $15,500 of earned equity just by paying the monthly payment, and then that $14,580 from the home's increase in value. And when we combine those two numbers, that gives us a total of $30,080 in equity. And if we are assuming a $1,200 mortgage payment, which is similar to average rents, in this same 5-year period, we are looking at being in the negative $72,500 in rent, but instead, by just paying your monthly mortgage payment and the increase in wages, the homeowner accrues $30,805. So, given that, we use this model to make it possible to keep this home affordable for future families. So we use that increase in the AMI as the base price for the new CLT home. So we look at the original price of the home, and then we add on that increase in value to get $194,580. And that price is going to be set so that another family in a similar condition, or sorry, financial situation, will be able to purchase the home. And that's much more of an affordable rate for the neighborhood than the market increase. Okay, this home is in Highland Springs. It sold earlier this year. I believe it was $180,000. A 3-bedroom, 2.5 bath in Highland Springs on Fern Avenue. It has a sister identical home right next to it. I am going to open the space for some questions, and Shabana will be going into application process questions. So if you have anything specific for applying, please hold on, because it will likely be answered in the next section.
And I want to highlight, I know someone mentioned or asked about Eastern Henrico. These homes are actually in Eastern Henrico as well. Any questions?
Yes, I have a question. Well, like I said, will there be any more built in Eastern Henrico, or that's like it for the homes that were, built there?
We do foresee additional homes in Eastern Henrico. We'll
Okay.
talk a little bit more. Yep, we'll talk a little bit more about just the process in and of itself, how you find out about homes, because you won't see our homes on the market
Right.
more likely than not, but we'll talk a little bit more about that. But yes, we will have more homes in Eastern Henrico.
Okay, thank you.
You're welcome. Okay, seeing.
You're on mute.
Thank you. Seeing no questions in the chat, I know that we'll move forward with learning a little bit more about the application, but I think I will take the next slide if you don't mind, Elizabeth. Okay. You can go to the next one, please. Yeah. So let's talk a little bit about being ready, right, for home ownership, and being ready mentally as well as financially for home ownership. And so here are some questions that are helpful, hopefully, that you should ask yourself. Again, this is regardless of pursuing home ownership through Maggie Walker or some other entity, or on the conventional market. So you want to ask yourself, what percent of your income can you spend, or maybe I should say, should you spend on housing, right? So what percent of your income should you spend or can you spend on housing? Okay, what is your credit score and DTI? DTI stands for debt to income ratio, okay? What is your credit score? So you want to know that. Typically for this program and for affordable housing programs, even outside of us, 640 is the lowest credit score that you can have. But you also want to know what your debt to income ratio is, which means how much debt do you have compared to how much income that you have. Keep in mind that lenders are going to look at you from a holistic perspective. So what I mean when I say that is it's not just a checkbox. So I have a credit score of this, check. My DTI is this, check, right? They're going to look at everything. They're going to look at your income and all of the things that we just mentioned to see if you are financially ready for a mortgage product with them as a lender. How much am I currently spending on housing and how much am I comfortable paying? Right? So there's one thing to say, here's what I'm currently paying. I'm managing that, but maybe you're renting and all the utilities are, there are some utilities that are included. So while maybe let's say your mortgage stays the same, you may have more money walking out of the door because you're paying more money for utilities. So these are questions that you want to start asking yourself. For the person that's interested in Eastern Henrico, you may contact the county or Dominion, right, who dominates Virginia for the most part with energy. But you may ask, what is the area, what is the average for a 3-bedroom home in said zip code, whatever zip code that is? And they can give you those numbers. That's not to say that that is what your numbers will be, because of course that can change depending upon how many people are in your household. But those are some questions you can start asking yourself to prepare for how much you're willing to pay, right? And what your comfort zone is in affordability when it comes to home ownership. How long have I been at my current job? Keep this one in mind, please, because a lot of times, if someone's lease is about to come up for renewal, they may say to themselves, I don't want to rent anymore. I think I'm going to pursue home ownership. And while that's fine, if your lease is ending shortly, it is an unrealistic, for the most part, goal to think that you will close, let's say, in 30 days, right? That you'll purchase in 30 days. Also, jumping jobs may affect your ability to get a mortgage, right? So you want to have at least 3 months of pay stubs, okay? And there may be some circumstances where that might not be applicable, but for the most part, the standard, you want to have at least 3 months of pay stubs, which means you want to have stability on your job. Lenders are looking for that, okay? So keep notice. Of course, we want to gain more income, and changing jobs allows us to do that for the most part, but that also affects your stability, which is what lenders are looking for. And lastly, how much savings do I have for emergencies and maintenance repairs? It's not an issue of if, it's just an issue of when. So those things are going to happen. Okay, so you want to prepare for a rainy day. The rain is absolutely going to come. Okay, so keep those things in mind as well. Okay, I believe we can hand this on over to Shabana. Next slide.
Thank you, Candace. So I'm just going to go over the application process. So the first step, congratulations, you have attended this info session. So that's the first step in starting this process. So you can check that off your list. After this session, we encourage folks to apply for the mortgage pre-qualification. As Candace mentioned, we have a list of approved lenders on our website, and we have 2 of them on the call with us, Jordan and Mary. And then After applying for pre-qual, you are going to submit application and income documentation, which is something Candace was just talking about. So there will be 3 months of your recent pay stubs, 2 of your most recent tax returns, and then 6 months of your bank statements that will be a part of that income verification step. The third thing is then you will be asked to complete a HUD-approved homebuyer education course. There are a few partners, including Home of Virginia, Virginia Housing, and Southside Community Development that offer these, I think virtually and in person. And so usually when you complete one of these courses, you receive a certificate, and so that would be submitted as a part of your application. And once you do that, you submit the application to us. You can do that via mail or electronically. We accept the application in various ways. And then our team goes through the process of verifying each of the items that are required. Next slide. And again, as a part of the step for the income documents required for the verification, the step 2 of the application process, just as a repeat, there are 3 months of your most recent pay stubs, 2 most recent federal tax returns, and then 6 months of bank statements are a part of that. So you'd be submitting those as a part of your application. Next slide. So there are various other ways that are outside of this program that can help assist you through this process of realizing home ownership. So Home of Virginia and Southside Community Development both have down payment assistance programs. They also provide financial counseling and are able to help folks. So if you maybe are not at the place where you're ready to fill out the application, both these organizations provide resources, including financial counseling, help with credit scores and things like that to help you reach that goal. And so there's various ways that you can receive support for this process. Next slide. And then these are just highlighting other programs that also may support your goal of home ownership. Maggie Walker isn't the only avenue. We encourage folks, Candace always likes to say that whether or not you choose our program, we do want to help you realize your goal of home ownership. And so these are just other organizations that we're highlighting that also do that work in this area. Did I miss anything? Any questions on the application process? I can drop the link in the chat that gives an explanation of all of these things. Let me see. What is the turnaround time? I think that depends, but it's generally within a few weeks, depending on how many we have, I think, in the pipeline too. If we get a whole bunch of applications, it may take a little longer, but once we verify all of the documents and we have that all keyed into our system, you usually will get an email within a few weeks with either a denial or acceptance into our applicant pool. Any other questions?
We can go to the next slide.
Oh, just got some questions.
So there's a question, should applicants wait until everything is together, like credit score, before submitting the application? So feel free to submit the application, however, or can we get the paperwork in first? You want to gather all of your documents. You want to speak with the lender. That's the first thing that you want to do. Outside of this, as Shavonna mentioned, you've already accomplished step 1, which is coming to this info session. But have that conversation with your lender, choose a lender. In terms of the application, right? You will, once a completed application is received, which means you'll get an email that, as Shabana says, that says you're either approved or you don't meet the qualification for the program. Your name goes into an applicant pool. And that's important to note, because that is how you find out about the homes. Okay, so we are not the Hunger Games. It's not first come, first serve. We use a buyer prioritization policy that provides the home to the person with the highest need. And that buyer prioritization policy is on our website. So you can check that out there. So yes, pull your documents together. You can send the doc. It's better if you send them all together, because we can give you an overall approval once we get all those documents. But if you choose to send pieces at a time, just note that you won't get an approval or a denial until we're able to verify everything. So it's really up to you how you choose to turn your documents in. Okay. All right. Shabana, do you want to cover the post-purchase stewardship?
Mhm. Yes. So once you become a homeowner through the Maggie Walker Community Land Trust, you become part of our family. So once you go through the home buying process with Elizabeth, we don't just go, okay, bye-bye. You become part of our family. And so specifically my role in the stewardship and engagement is we want to constantly build relationship and be engaged with you all. We want you all to get to know each other as members of the Maggie Walker family. So we are really passionate about not just encouraging folks to build that community, but to be proactive about things like repairs and the rainy day fund Candace mentioned, and other resources that are available to all of us in the communities we live in. So we try to provide that and facilitate that, but we also encourage everyone who's part of that community land trust family to connect with each other. So once you become a buyer, a homeowner, excuse me, you usually will see a lot more of me, and we will always be in touch. So remember this face and the name. Yeah, and so we are always open to questions and conversations and helping folks and supporting folks, because buying the home is just one part of this journey. It's a big part of it, but there's things that come with being a homeowner, and so we're here to be a part of that journey with you. Next slide.
Okay, everyone. So we're going to recap a little bit about what we discussed tonight, but I want to revisit. Thank you so much, Shabana. I want to revisit process a little bit, and just share with you guys that what I mentioned about the applicant pool. So once you have an application that has been verified, you get that acceptance letter. Hey, you qualify for the program. You go into the applicant pool, and the applicant pool then gives you the opportunity to receive an email as homes become available. All of the homes that we have. So whether that's Verina, Ettrick, other homes in Henrico, other homes in Richmond. From that point, you would, if you're interested, you'll see the email that goes out. If you're interested, you would then respond, and then we would set up a time with your realtor and ours for you to view that home. And I want to share that because, like I said, if you go looking for our homes on some of the larger websites, you won't see them because we provide the opportunity to people in the applicant pool first. The only time you'll see our homes on the market is if someone in our applicant pool is just not interested in the home. Then we would put that home on the market. And that could be for a myriad of reasons. More than likely, it's because the home doesn't fit the person's family size, right? Or someone is looking for a particular location like Verina or Henrico or Chesterfield. Okay, so there was a question about how long does the process take? I also want to note, Shabana answered that talking about the application, but how long does the process take in terms of once you get into the applicant pool and then purchase? We like to say it can be 45 to 60 days. And that is contingent upon if you're using down payment assistance, which could be from some of our sister organizations or partners like Housing Opportunities Made Equal. If you have not taken that class, we strongly encourage you to do that. Sign up for their homeownership class as well. It's great information, and it gets you in with a counselor that can set you up for hopefully getting down payment assistance, okay? So let's take a moment to recap what we've talked about. Owner occupancy. It is very important that if you purchase through us, you must reside in your home full-time. The program does not allow for Airbnb or subleasing, okay? Subleasing meaning you live somewhere else and someone lives in your home, okay? You are free to rent a home or a space in your house. You are free to do that, but you must, this must be your primary residence, so you must live in your home full time. Elizabeth mentioned resale. Keep in mind that you will have your home will increase in value based on the area median income, which is inclusive of wages, not the market. And a Maggie Walker CLT home, homeowner cannot resell the home for full market value. Again, one hand is pulling you in, you're pulling someone else in. So your home must be sold to another prospective buyer who income qualifies, okay? And then maintenance and repairs. Shabana mentioned that is your responsibility, okay? You are responsible for the maintenance and repairs of your home. However, the first year of purchase, specifically if you're purchasing a new home, your home will have a warranty. And then, of course, you have new appliances, and your new appliances have an extended warranty as well. Remodeling, let's talk a little bit about that. You do have the right to undertake home improvements, but you must get board approval for changes that require a local building permit per the city or the county. Again, if you're making changes that do not require a permit, you do not need permission from the board, but something like a fence, we need to know. And the main reason for that is if you're putting that fence on property that isn't property, right? It's not part of the land, then it's going to be your responsibility to remove that fence and put it back. So it's good to check in with us to make sure you're putting that privacy fence, which you are more than able to do, on the proper property line. And then lastly, the land lease fee, that ground lease fee is $100 a month. It's an annual fee that you must pay in exchange for utilizing the land. Okay. Next slide, please. Okay, and we have some housing resources. Maybe you're interested in home ownership, but you're not quite ready. There's Commonwealth Catholic Charities. Their number is just there. And then the housing resource line may also point you in the right direction to some home ownership and assistance. Sometimes we have people on the call that are not ready, but also need assistance with maybe a property that they're renting or just more information. So the housing resource line is there for your convenience as well. We have put or placed our email addresses. You can go to the next slide, Elizabeth, in the chat, but please feel free to screenshot it here as well. And so before we go, we are letting you guys go a little bit early today. We do have a poll that'll pop up on the screen for you that we ask that you fill out, take a moment to fill out. And while that is coming up, if we're able to do so, thank you. Any additional questions, please feel free to utilize the chat. And so it's a 4-question quiz. Again, we don't give quizzes to be graded. This is just a review of the information. So please take a moment to complete that. And utilize the chat if you have any additional questions. Also, while you all are completing the quiz, please feel free to go to our website. I will say that the website has just been updated. So there may be some links that may or may not work properly. Please give us some grace in that regard. But check out the website. Let us know if you have any questions. We'll be more than happy to answer those for you. Okay, Shabana, are you able to pull up the responses to the quiz?
Yes, are you able to see it, Candace?
Let's see. I cannot actually.
Okay, I could do a quick review of how
Yeah,
folks answered.
cool.
So our first question was if folks were planning to submit an application. So about 50% said right away, and we had a little bit of a mix of maybe in the future, but not at this moment. So that's really exciting. Our second question was the true or false about Maggie Walker Community Land Trust homes being fully inheritable. And we had 92% of folks pick the correct answer, which is true. The third question was about the equity you will get back when you sell your home. And we kind of had a split between folks, a third of folks choosing the loan principal you've paid off, your home's increased value, and all of the above. And the correct answer there is all of the above. So folks were in the right ballpark with that one. And the final question was about how will your home increase in value? And so 83% of folks chose based on the increase in the Richmond area median income, which is the correct answer. So folks did a pretty good job of retaining a lot of information that we threw at them tonight.
Awesome. And indeed, it was a lot of information. So again, our email addresses are there. Please feel free to reach out to us. If you have any questions, this session happens every second Tuesday of the month. So please feel free to share. I feel like I'm a YouTuber, like, comment, don't subscribe because we don't have a subscription, but definitely come back. Different questions come up each month. And so you may hear something the next time that you didn't hear this time. Okay. Thank you, everyone, for being here. Reach out if you have any questions, and we hope you all have a good night. Take care.